Here are 100 definitions and key concepts for the CFE certification, divided into the 4 main areas of study: financial transactions and fraud schemes, law, investigation, and fraud prevention and deterrence. First, financial transactions and fraud schemes, 25 definitions. Asset misappropriation, theft or misuse of an organization's assets. Financial statement fraud, intentional misrepresentation of financial reports. Bribery, offering, giving, receiving, or soliciting something of value to influence a business decision. Corruption, dishonest or fraudulent conduct by those in power, typically involving bribery. Embezzlement, fraudulent appropriation of funds or property entrusted to one's care. Kickbacks, payments made in return for facilitating transactions or appointments. Ponzi scheme, investment fraud that pays existing investors with funds collected from new investors. Skimming, taking cash off the top of a daily receipt total. Lapping, concealing the theft of cash by overlapping other receivables. Accounts payable fraud, schemes involving the creation or alteration of vendor invoices to generate fraudulent disbursements. Accounts receivable fraud, manipulation of customer accounts to steal incoming payments. Check kiting, writing a check from one bank account and depositing it in another without sufficient funds to cover it. Channel stuffing, a company inflates its sales figures by sending retailers more products than they can sell. Shell company, a business entity that exists only on paper with no physical presence or operations, used to conceal fraudulent activities. Sales skimming, failing to record a sale or part of a sale to steal the cash. Phantom vendors, creating fake vendor accounts to issue fraudulent payments. Procurement fraud, schemes involving the purchasing process to misappropriate funds. Payroll fraud, manipulating the payroll system to receive unauthorized payments. Ghost employees, creating fake employee records to collect unearned wages. Expense reimbursement fraud, submitting false claims for reimbursement of business expenses. Billing fraud, schemes involving fraudulent billing, such as fake invoices. Bid rigging, collusion among bidders to manipulate the bidding process. Insider trading, trading a public company's stock or other securities based on material, non-public information. Money laundering, concealing the origins of illegally obtained money. Investment fraud, deceptive practices involving the misrepresentation of investment opportunities to gain personal benefit. Second, law, 25 definitions. Affidavit, a written statement confirmed by oath or affirmation, used as evidence in court. Appeal, applying to a higher court for a reversal of the decision of a lower court. Arbitration, the process of settling a dispute by an impartial third party outside the courts. Asset forfeiture, the legal process by which the government seizes assets derived from or used in criminal activity. Bribery, offering, giving, receiving, or soliciting something of value to influence the actions of an official. Civil law, the body of laws that govern private rights and remedies as opposed to criminal matters. Class action, a lawsuit filed by one or more plaintiffs on behalf of a larger group. Common law, law developed through court decisions rather than through statutes or written legislation. Compliance, adherence to laws, regulations, guidelines, and specifications relevant to business operations. Conflict of interest, a situation in which a person or organization has competing interests or loyalties. Conspiracy, an agreement between two or more persons to commit a criminal act. Contract, a legally enforceable agreement between two or more parties. Criminal law, the body of law that pertains to crimes and their punishments. Cross-examination, the questioning of a witness by the opposing party during a trial. Defendant, an individual, company, or institution sued or accused in a court of law. Discovery, the pre-trial process by which parties obtain evidence and information from each other. Due diligence, the investigation and evaluation of a business or individual prior to signing a contract. Embezzlement, fraudulent appropriation of funds or property entrusted to one's care. Evidence, information presented in a trial for the purpose of proving or disproving a question under investigation. Expert witness, a witness with specialized knowledge, skills, or experience that qualifies them to give opinion testimony. False Claims Act, a federal law that imposes liability on individuals and companies who defraud governmental programs. Forgery, falsifying documents or signatures to deceive others. Fraud, intentional deception to secure unfair or unlawful gain. Grand jury, a group of citizens that determines whether there is sufficient evidence to charge someone with a crime. Indictment, a formal accusation initiating a criminal case, presented by a grand jury. Investigation, 25 definitions. Background check, the process of verifying information provided by an individual, including employment history, education, criminal records, and other personal details. Chain of custody, documentation of the seizure, custody, control, transfer, analysis, and disposition of physical or electronic evidence. Confidential informant, an individual who provides information to law enforcement agencies on a confidential basis. Corroboration, additional evidence or information that supports or confirms the initial evidence or testimony. Criminal profiling, the analysis of a crime scene and other evidence to construct a psychological profile of the perpetrator. Document examination, the analysis of documents to verify their authenticity, detect alterations, and identify forgeries. Due diligence, the investigation and evaluation of a business or individual prior to entering into a transaction or agreement. Electronic discovery, e-discovery, the process of identifying, collecting, and producing electronically stored information, ESI, in response to a request for production in a legal proceeding. Expert witness, a witness with specialized knowledge, skills, or experience that qualifies them to provide testimony in a legal proceeding. Fact-finding, the process of gathering and examining evidence to uncover facts relevant to a case or investigation. Field investigation, the process of gathering evidence and information outside of the office environment, typically through site visits and interviews. Forensic accounting, the use of accounting skills to investigate fraud or embezzlement and to analyze financial information for use in legal proceedings. Forensic audit, an examination and evaluation of an organization's or individual's financial information for use as evidence in court. Forensic interview, an interview conducted to elicit information from a witness or suspect in a manner that will withstand legal scrutiny. Fraud triangle, a model that explains the factors that cause someone to commit fraud: pressure, opportunity, and rationalization. Incident report, a written account of an incident, typically documenting the details and circumstances of the event. Indirect evidence, evidence that implies a fact or event without directly proving it. Informant, an individual who provides privileged information about a person or organization to an agency. Information gathering, the process of collecting data and evidence relevant to an investigation. Interrogation, the act of questioning a suspect or witness by law enforcement authorities to obtain information or a confession. Interview, a structured conversation where one party asks questions to gather information from another party. Kiting, a type of bank fraud where a person takes advantage of the float period by depositing and drawing checks between different banks. Lifestyle analysis, the assessment of an individual's lifestyle to identify any discrepancies with their known income. Link analysis, the process of evaluating relationships between individuals, organizations, and events in an investigation. Money trail, the documentation of the movement of money through various accounts and transactions. Fourth, fraud prevention and deterrence, 25 definitions. Internal controls, processes implemented to safeguard assets, ensure accurate reporting, and promote compliance. Risk assessment, identifying and analyzing potential risks that could negatively impact an organization. Corporate governance, systems and processes to direct and control a company. Ethics programs, initiatives to promote ethical behavior within an organization. Fraud risk management, identifying and mitigating fraud risks. Whistleblower hotline, a confidential way for employees to report unethical behavior. Fraud triangle, a model explaining the factors that cause someone to commit fraud: pressure, opportunity, and rationalization. Occupational fraud, the use of one's occupation for personal enrichment through the deliberate misuse or misapplication of the employing organization's resources or assets. Red flags, warning signs or indicators of potential fraud. Audit trail, a step-by-step record by which financial data can be traced to its source. Fraud awareness training, programs designed to educate employees about fraud risks and prevention. Whistleblower protection, laws and policies that protect employees who report misconduct. Segregation of duties, dividing responsibilities among different people to reduce the risk of error or fraud. Fraud detection, methods used to identify fraud occurrences. Anti-money laundering, AML, measures to prevent the generation of income through illegal actions. Compliance programs, internal policies and procedures to ensure adherence to laws and regulations. Fraud prevention, measures taken to stop fraud from occurring. Due diligence, the process of investigating potential risks before entering into a business transaction. Behavioral red flags, observable behaviors that may indicate fraudulent activity. Control environment, the set of standards, processes, and structures that provide the basis for carrying out internal control across the organization. Tone at the top, the ethical climate created by the organization's leadership. Surprise audits, unannounced audits to detect and prevent fraud. Ethical leadership, leading by example to foster an ethical work environment. Fraud policy, a formal statement outlining the organization's stance on fraud and its prevention. Continuous monitoring, ongoing scrutiny of transactions and activities to detect and prevent fraud. These definitions and concepts cover the essential areas of the CFE certification, helping students build a strong foundation for their studies and exam preparation. If you find this video helpful, please don't hesitate to give us a thumbs up and subscribe to Simple Understanding channel for more helpful videos.